Welcome to the Pump and Dump channel for another video, this time talking about CNX Resources. So tomorrow we have the earnings report. The company releases the earnings report before the open, and it also does a conference call after the open. It is a company I feel I know very well. I've known them for, I'd say I've looked at them more intensely for a year now, and I've come to really understand the investment case here and understand what the company is, what it is worth, and so on and so forth. So before I get into talking about that, I'll bring up the theoretical model portfolio that I started a while ago. I haven't done many videos. I was thinking about buying CNX Resources in it the last couple of days, but I guess I was lazy and didn't do it. But anyway, it doesn't matter, it is what it is. So I've decided here, a sale of Noble Energy, purchase of CNX Resources. As you'll see here is that I did sell at 8.33 to buy Range Resources at 5.15. Now you can say, well, okay, I mean it's worked out and whatever, I could have changed back before and gotten 30% more CNX Resources if I had been nimble and paying more attention on this this theoretical model portfolio. But to be honest, this is something that's not so important to me. It's just something that I do on the side, and it's not necessarily reflective of my own performance. It's just something I do for a key set of rules where I can only buy after the close when there is no news that justifies the price to go up the next day, unless it is already known before. So that's kind of what it is at. So getting back to CNX Resources, talking about it, my expectation for tomorrow, and this is not investment advice or recommendations for anyone to feel they need to buy or not buy or whatever, but my expectation for tomorrow is that the stock goes to 11.50, and I think it will do so in two steps. There'll be a big gap up going into the open, 10.50, 11, something like that is possible, and the pullback, of course, people taking profit on the open, and then finding a floor, getting into the conference call, having the management talking about how great things are, and then maybe we get to 11.50. That's kind of what I see, or maybe it takes until Friday, but I do see us getting to 11.50 tomorrow, and if things go even better and the market really likes what they hear here, it might go to 12, it might go to beyond 12, but kind of 12 is kind of what I would think is a cap near term for the next 2 days. And going into Monday, after people have had time to look through it over the weekend, maybe it goes even higher. We'll see. So getting into this target, why do I think it's going to 11.50 tomorrow? It's very simple. If we go here into the press releases, we can see that 2 days ago or 3 days now, whatever, they announced that they are buying the remaining shares of CNX Midstream to kind of integrate it with their company, which makes total sense because it seems like they are interdependent companies and the CEO of the two entities is the same guy. And why do you need to have two conference calls and two earnings reports? Why don't you just simplify the whole thing, save some G&A and things like that, and all is good. I mean, I don't know if the guy has two offices, but it is it's something that makes perfect sense. And I think I talked about this last year when the old CEO was leaving and the new CEO was coming in, so to speak, or coming over. I talked about this as a thing to look at, which made sense. And of course that's more purely an operational standpoint. I was looking at it, don't really see the case for the value to improve with this transaction very much, but they do think that CNX Midstream was very undervalued and they bought it, and that's just the way it is. Now, one thing that I think is a bit of a dick move by the CEO is that he came over, of course, from CNX Midstream, and maybe the conversion ratio of 0.88 CNX Resources shares for one share of CNX Midstream is maybe a bit generous, because he probably has acquired a lot more CNX Midstream shares over the years, and yeah, I mean, it is what it is. So that's that. The key thing though for the value driving, the surprise, let's say the pop, the above 1150. Of course, a good quarterly earning report can get you to the fair value, which I see at 1150 based upon where the natural gas price is at this point in time. And looking at this operationals update from 2 months ago, I think I did make a video about it. I think I'm pretty sure I did. Talked about it back then. The key thing here is that what they have done in Q2 is very important. I mean, people are probably looking at this company saying, oh, it's an oil and gas producer. Oil prices were really bad in Q2, and gas prices were also at multi-year lows at 140 or whatever it was, an MCF at the low, and they're probably going to have a terrible earnings report. So that's probably why it's so cheap. This is kind of what I think. It's just cheap. The operations update here was very important. They described what they were doing in Q2, and if you think about what has happened in Q2, everything has to be positive. It just has to be. So what they said here was that they were basically shutting in production. They'll say, of course, to protect their workforce or whatever, but key thing is they shut in the production, and instead of delivering natural gas and producing it themselves, because the price went as low as like 140 and was between 140 and $2 an MCF. I think most of it actually between 140 and 170, let's say. So they probably bought most of their natural gas futures in that area to kind of cancel out their hedge book position. And if you think about it, it makes perfect sense for them to do that. And on the same, in the same time, demand for natural gas and electricity and everything was down in the quarter, so maybe the buyers were happy not to take delivery because maybe they didn't need it or didn't think they would need it. So it's kind of a win-win type of thing. But the key is here that instead of producing the natural gas themselves and depleting their reserve, they just bought it in the market and are probably making more money that way than if they actually produced it themselves. So this is kind of what we saw in 2014-15 with the uranium producers, also in 16-17 when the uranium price was in the low 20s. All these uranium producers, these small caps, were producing little volumes. They were making tons and tons of money off of their hedge books because they could buy it in the spot market below what they could produce it for. And this is kind of what CNX Resources is doing here too. And also they mentioned that they added additional sales in Q4, I think it was, so they probably went for like $2.90 or so an MCF, maybe $3 an MCF in the back half of the year. With the production that they're not producing in Q2, they probably want to produce it at a later stage and get that money. And what that ultimately means is that they basically have 5 quarters of cash flows this year, and that is something that is, unique, I guess, in some sense. They just had the strategy that was right for the environment that we are in, the conservative approach, and as they call it, the lower for longer point of view. And this is kind of what's going to be paying off, and that's kind of why I see a big pop happening tomorrow when the market comes to realize that they actually did really well during the quarter, and therefore they should get bid up to fair value or premium even. Who really knows. Of course, they also did some other things like refinancing some notes. They talked about one of the benefits they mentioned was this let's call it a merger, because it's kind of like a merger, is that they think they can lower their cost of capital. Being a bigger company and having a more liquid stock might help their the investors coming in to trade their stock. So that is something that could erode any discounts to fair values more easily because the volume is there. And yeah, this is where it's at. Everything is positive in my opinion. I don't see what could go wrong for the quarterly report. Of course, I could be wrong, but I really don't think I am. I have the valuation down. I see that everything that happened in the quarter is positive, so the only logical conclusion is it must go up. So that's my my video for today. So remember, it's not investment advice or recommendations to jump in on the open. If it's moving fast, if you want to do it, you can do it. I don't really care. I mean, it's just I'm giving my opinion, what I see happening. And if I'm proven to be wrong, I'd be very surprised. But you know, I have to put my money where my mouth is. And yeah, that's kind of where it's at. So if you like the video, don't forget to subscribe. If you like the channel, if you want to leave a question, comment, opinion in the comment section, you can do so, of course. And with that said, have a good day.